Good afternoon, good evening, everyone. Today is Wednesday, October 2nd, 2024. Our goal here is to review the market generated information in a holistic fashion. We're intimately following the auctions narrative of both VSN and Q. If we have time, we'll theorize and add additional commentary towards the end. There is a uploaded recording of the first 2.5 hours of the market today. Please check it out if you have time. All right, perfect. So starting off with our summary and the narrative questions, where's the market coming from? And what is Price trying to accomplish? Today we were fairly light on the docket. The majority of this was the geopolitical news. Not much for earnings, but mainly like war tensions, essentially. Very light on the data overall, just the ADP employment, which is fairly early in the morning at 5:15, and then a plethora of Fed speakers, so it's kind of scattered throughout the day. So again, not really too much from a narrative standpoint. We are waiting for some more data tomorrow at the 7 a.m. The ISM services and factories orders, as well as the jobless claims, the PMIs for sure. So tomorrow will be interesting, but definitely the non-farm payrolls on Friday. So ideally, price is probably just going to mainly want to build sideways and um, as price is a bit undecided until we have more data to kind of go from there. So again, going off that narrative, it's not surprising that we see a fairly tight range here. The buyers wanted to ideally close above this five daily SMA, uh, particularly above this 50% of this candle here, ideally the 62%. But if that fails, ideally minimize or draw down because they want to use this as a boundary. And of course, below that is below the 5,700. So ideally, the buyers want to defend this 5,700 points. Um, Staying within this candle will buy them some protection. And ideally, they want to eat up this candle. So high side, and then our low side being here. Same situation for the NQ, though they're not at their all-time highs. They ideally want to minimize their downside and ideally close a little higher. Inside bar for the NQ, and I think that's considered an outside bar. I'm not sure, but again, it looks like they just built sideways. But looking at the actual daily on the footprint, we can see about 257 range here. Not really too much for the volume. It's about average of what we're seeing over the past week or so, past 2, 3 weeks actually. Um, we finish net positive overall, with the minimum being negative 3,300. So sellers had control for a bit, and then the buyers were able to kind of push it back, and we ended up closing somewhere near the open for the most part. Certainly not too much to show there, especially on lighter volume. Still inside the bar, so we're just building more volume within the previous candle. Same situation here for the ES, except they did break their low, but they ended up scurrying back up. Notice very low volume. And again, we can look and see how exactly that happened when we get some more context shortly. Same situation, lightish kind of volume below average, with these sellers having advantage for the majority of the day and even finishing net negative about 14K. So again, solid push from the buyers, been able to buy. This is considered a discount from what we can see. These prices were considered cheap, but again, we'll look at the context with the market profile now for a better understanding. But before we get there, let's take a look at the sector tracker so we can actually understand, get a little more context here. So we finished unchanged. We did see that on the daily, but where did this come from? So the top three, excuse me, the top three would be the technology, the finances, and the healthcare. The leader ended up being the technology. Again, we're going to disregard the energy. They're not the one of the lighter sectors, or yeah, one of the lighter assets. So for the technology sector, again, it's a solid showing from Apple, and then the chips and everything, Salesforce, so on and so forth. So again, they finish up almost 1%, 75 basis points, and then evening it out here with the financials. It was nice for them to take a break and not end really negative. Today was the day for them to really hold solid. Everyone else kind of sold off. It was a bit mild, so mild to the downside for discretionary. Again, with this being fairly weighted sector. A lot of this came from the top two, Amazon and Tesla, primarily Tesla. Everyone else did well outside of like Nike. You know what I mean? So I mean, it was just about even Starbucks. So just about even across the board. So the heavy hitters, they did their job. Everyone else didn't do bad today. Let's say that. So fairly simple. All right, back to the market profile for the same S&P 500 we're looking at. Do remember that we had the singles above us, and these have not been tested. These singles are from the 5,800 to the, let's call it the 84, so about 16 points, and no test at all. So very tight range that was held here, with being a new low created, uh, but no real excursion to the upside. We did not have any singles for this. We did have a bit of an excess low, so I mean, say what you will about this. But for the most part, this was just a normal shape day. We're really just building volume sideways from what we can see. Essentially, this is still just a bear flag. Again, we've seen this in the RTH sessions where we'll bear flag, we either bull flag or bear flag, and that's kind of what's happening now. Do remember that we are within this FOMC range. We're eating about halfway into this candle. Not only that, but we also ran some of these stops from some prior structure with the um, September. So we ended up running these stops here. So again, they're able to go down to break through and then push back up. But just know that we have some territory that's starting to break a little bit. I wouldn't be surprised if we revisit this solid zone here. This is where we had all those damn sellers from. I believe this was August. I believe this was in August. So I mean, this is the VPOC zone for this composite. It's actually, no, it's actually up here. It's actually about the same, so just bear with me. It's really between 5,600 and 5,700, but essentially this 5,700 is where we had like a shitload of sellers in the past. Um, so yeah, the buyers are they're kind of running out of territory a little bit. Their backs are not against the wall, but something to be mindful of. And we have the Nasdaq, same situation. They had the singles above them for overhead, and they actually poked through just a little bit, just by a couple of points. I mean, that's definitely worthy. We'll bring that up just a little bit. I'll fix that later. I'm not gonna worry about that. But yeah, essentially just a high normal day. Somewhere it looks like a little bit of a P to be honest, but that's probably due to the short squeeze that we saw here. Again, we'll get a little more context looking at the intraday shortly. So again, we'll go ahead and throw that bad boy. So that's our weekly profile compared to the prior month, compared to back in April. Yeah. So we have these singles above us, and then this was an inside bar, so no new low created. Very decent from the Nasdaq. So let's see if we can look a little deeper. Again, same situation here, the same Nasdaq. We'll throw on those same lines so we can kind of see where we're at. 138-minute candle. Again, this was still an inside bar from this original impulse, and we're starting to eat our way back up, really staring at these singles. Given the data that we have that's upcoming, I wouldn't be surprised if we kind of break through these. If we don't, then that's a situation of when what should happen doesn't, from Peter Resnick. Same love to the S&P 500. Again, they were near their all-time highs. We ended up breaking through some of this FOMC zone, and now we're finding our way up. And we're just kind of trading above that zone for right now. So again, it looks like it may not be as sharp as when we touch it, we bounce back up. But we are eating through a little bit more because this is now the first, second, third, fourth, fifth visit within this FOMC zone. So I mean, this is starting to wear out a little bit. I wouldn't be surprised if we see a lower high here. So again, buyers really want to take control over these 55 halves, these 55 50s essentially. All right, let's look at the intraday. On the 3 minutes we have here, let's start off with the S&P 500. So again, we have our today, we have our overnight, Tuesday overnight, Monday overnight, Monday, Sunday. All right, make sure I got this right. Sunday will be here. All right, so we had our Sunday overnight. So look, so we're chopping up and down, break lower, go higher. Chopping up, chopping down, chopping up, break lower, go higher. Another leg lower. Chopping, 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 chopping. Break lower, go higher, chopping, chopping, chopping. So I'm not saying that we're going to see more consolidation in the overnight, but it's interesting to see these zones that are being created, and then we're running these stops and then shooting back upwards. I'm not sure what to make of that. There's just something that I'm noticing. So again, now that that's been a bit overly simplified, we had our bear flag big sell off day yesterday, and we ended up coiling, which would be more pressure. You would assume that we may squeeze lower, which is exactly what happened in the beginning of the day. Again, all this is no kind of volume, excuse me, no kind of, what do you call it? No kind of data or anything that's really happening right now, just Fed speakers and the geopolitical tensions that we are seeing. So we have our beginning of our RTH. And this looks like another open drive. We've seen this before. Pew, straight down. First 5 candles, straight down. Open is near the IB high. There was no kind of excursion. Cool. Where exactly are we headed? You know, we did break these. Let me remove this zone. We did break the 30s, which is where those stops were on the market profile. We broke through those, immediately reverse. Not only did we reverse, but we engulfed one, two, and then half of the other candle that led us down here. This is a nasty candle in one area, though it may not respected it at the top and then in post. We just ran through here and immediately erection through it. So I mean, this was like a sign of strength here. And I only say that because this is part of like our trade of the day, but we'll talk about that a little later on. So I mean, it's fairly simple. This looked like an open drive at first, but once we got more information and it held, this first bracket ended up being a open rejection reverse. So we closed back above the 5 smoothing average, this midpoint, the VWAPs, both VWAPs. And then at 7 a.m., we really just pushed it. We've seen it several times where we just kind of squeeze through this 5 smoothing average and not having any kind of trading below it. So, I mean, this ended up being a bit of a trend day early in our session, and we could tell pretty early. And that's actually how it ended. Any dips were bought. These were considered cheap, fairly simple day. Days like this are pretty powerful because you would assume we'll see more continuation to the downside with these. But this just seems like we just kind of just stopped. Excuse me, let me not draw it like that. We just went lower, and now we're just balancing even more to the side. So I mean, we're still in this bear flag overall, but I think it is important to know that we just ran these stops and it just had a trend day. So a very solid day for the Bulls. It doesn't look that good under the hood, especially when this is still within this bear flag, which is a bit dangerous. Um, but say what you will, they really want to get above this IB mid here, get themselves back into this prior week's range. But all right, we'll leave that there. Same situation here for the NQ. We won't go over the play by play for the whole week. But again, they had their same range. But the only thing with them is that they actually did not break their low for um, for the start of the RTH, which was pretty cool. So we did our chop up, chop down, chop up, chop down, open drive, but they didn't make this new low down here. So while ES made their low, NQ did not, and that was definitely not necessarily a sign of strength, but relative strength for sure. Their first candle also wasn't a red bar, so I mean they ended up being a gulf. So this was a bit scary in real time, seeing them push up and then swallow it up like this. Again, this is why it's important to watch the DOM, and then just trend down lower. But as soon as we trended down here, this got reversed, and then we had follow through. Theirs was a little more easier, not easier, but this one's a little more. You had a better entry here. You could easily, get in at one of these closes and maybe risk a low, or get up here when you have a little more information because you created a new high on that last candle for the A bracket. Let me see if I can zoom in a little bit more. Actually, I might as well. It's literally the point of the video. So you had your impulse here, you had your continuation, and just these two bars here. This was a higher low, this was a higher low, this was a higher low, and a higher high relative to over here. So I mean, most people would try to do the breakout here and get stopped out, and then we burst through once more. Even had a retest of here. So again, this was a solid showing of a typical trend day, and we somewhat figured that giving the tightrope through this five smoothing average with minimal closes under. So again, solid day overall for the buyers. Again, this was a bit more of a simple day. Trend day within the bear flag, not really much was happening. No structure was breaking. We are looking forward to the to the data that's upcoming. I don't believe I went through the footprint for the intraday. So this is for the Nasdaq. And again, this is what we've been talking about recently. We have our push up, try to push a little bit more, and then we're just bear flagging. So it just seemed like once we do our move, we're just kind of losing energy. So whether that means, that maybe there's something to say about the players that's in this market, they're getting their business done, in the first bit of the hour, the first hour of the day. I mean, but other than that, we're not really seeing much happening in the later portions of the session. All right, so a quick note on our trades of the day, which we were trying to fool with these in real time on Sim. So some of this was gleaned in real time, and you can look at the DOM for your own reference. So again, this is on a 1 minute. This was the breakdown that open drive consolidated, and then we broke lower through that 30 zone that I was talking about. Once we broke through the first green candle, like, okay, say what you will about that. We ended up pushing through, engulfing this whole 5 minute bar over here. And again, these are 1 minute candles, and you're just continually pushing through. So again, if you missed this or you're just unsure about buying a breakout, given there was no real pullback, and that's understandable, then by all means, if this is going to be a strong trend, giving a strong reactive response from a important area of interest and through with complete strength and no pullbacks, on the first pullback below this five smoothing average, we would assume that this will be bought. Now, where your stop is, that's where it kind of depends, and that's why we look at the DOM. But I mean, even if you got in here a bit late, let's call it 44 halves, putting your stop here at this IB mid for about 7 points, you can easily target here. Your stop will be here for 7 points, and at least targeting the high, which is 20 points away. So I mean, it ends up being about almost like a 3-to-1. This just makes sense, and you will have several chances to add as we dip below here, given what it looks like on the DOM when you're touching some of these other DGPs, these other daily generated prices, VWAPs, the open, and so on and so forth. So you have to be a little careful. Definitely a bit scary to hold that long. Um, but yeah, we really should be looking long, given the Bulls have control over the highest time frame, the intermediate, and the dailies as of recently. Some of the momentum is starting to change for the Bears. So I can definitely see how you would start this session and look for, maybe some shorts near the overnight highs. But given the fact that there was no continuation, like no kind of fight from this area, I don't really see why you would be looking to even trade that. Looking at this on the 15 minute, even like why would you? Let's actually just take out for the hell of it. Let's actually take off the we'll take off the like what about this makes you want to short? You have this huge candle that's engulfed in two candles on a 15 minute. Nothing about this really makes sense. It's maybe here with this red candle, once you push above, this could be considered like a look above and fail. But to be honest, the fact that no one really wanted to trade down here, like what about this makes this attractive for you to short? At most, Bears would be lucky. Bears would be lucky if we even came down to this 57.40s and they were able to lick their wounds and possibly get out. But I wouldn't imagine there would be any kind of continuation to the downside, given this initial reaction from a known level, if that makes sense. So that's why I wasn't really looking for shorts here. Again, this was a little cleaner on NASDAQ, which sounds funny to say out loud. Um, but they had a little more time for you to kind of pull back. So I mean, you can see. Let's throw on the studies here as well. So again, this is in the FOMC zone, the purple. So this is the high. We broke through this high, kind of started eating up some of this candle a little bit more. Once we found our reaction, again, we're looking at the S&P 500 at the same time as well. So we have our reaction. We finally come through this 5 smoothing average on the 1 minute, big impulse through. On these tests below, the fact that we can't close here, you would have to find your way to kind of get in here and possibly put your stop in near one of these lows here. So the stop was ran down here. Where you would get in, it'll be kind of tough, but you would really have to be quick in this situation. If you really wanted to, you would have a little more confidence with this, given that the S&P 500 was having the same behavior at the same time, especially with the NASDAQ having a bit of a stronger open, at least trying, relatively speaking. You have ways to get in here as well, even if you wanted to wait until the B bracket, when you start having these first closes. Again, you would have to look at the DOM. You could possibly buy, like, this actual first close below the damn 5 smoothing average. Now where your stop would be, again, the further you want to pull this back away, you could be looking at a good 30 points. But what would your target be? If you can kind of get in here when you're getting close to this open, but let me zoom in, I'm sorry. Once we're in a situation where we're pushing through and we push through this overnight high, once we found our way back down and we close under the 5 smoothing average, what is the first green bar? Let's say if you're a bit late, you can even buy this first green bar here. This would be at the 72. If you had it so let's say you were super late and we ended up risking 30 points. Okay, where will 60 points be? So this would be past this new high, about 15 points past this new high. You can see that would somewhat make sense given where this overnight range is, given this pivot here. So again, the fact that we've been following their structure for a while, you should know, like, just little nuances with the Nasdaq rather. This makes sense. But again, I wouldn't even be looking towards to add. I wouldn't be looking to buy at least this late in this rally. At least I don't think so. I'm kind of thinking out loud right now. But if you're super late, you can kind of get in here with a little more information. Technically, this is the first close under the 5 smoothing average, but that's between you and me. But again, you can definitely get in here some way. It'll be a little bit of an uncomfortable hold where your stop will be. If you really want to be a bit lazy, you can even get in somewhere near this 5 smoothing average and just put it near just one of these lows here, if not the whole damn overnight low, which ended up being about 35 points away. And again, you would be targeting from here to the high, which ends up being about your 2 to 1. So I mean, ideally, I would be looking more to buy in here. I don't really care for doing it in an A bracket, but I can justify buying a little later in this apparent trend day, given the behavior on both indices. So these don't look bad as well. Just a thought. Kind of wanted to talk that through because I'm working on getting in, just looking on the structured pullbacks versus the breakouts. These make sense. All right, so we'll go ahead and finish there. We'll give the buyers a better score than I would have given them in the first place, to be honest. So we'll give the NASDAQ, who did not make their low, we'll give them a 7, and then the ES, maybe a 6.5. There were no kind of surprises today. Again, it's going to be important to see how we behave for the overnight session and where we open tomorrow. We do have data, as we mentioned, so make sure you get your rest and have your plans and enjoy your night. All right, later.